Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways action on the Bitcoin chart. As you can see, the altcoins are just mixed, as we did have pretty good CPI data. Now, it wasn't stellar or anything, but it was pretty much as expected, and so that essentially allowed the chart just to go sideways. No harm, no foul. Here you can see the core CPI, which is what the Fed will be looking at. It was as expected. It was as last month. Now, there is a little bit of skepticism here, and shouldn't it be going down? Well, technically, it did go down like a 0.01 or something like that, and so it was a better reading. But there could still be debate whether or not the Fed needs to raise interest rates again, and so that's why you're just seeing the charts doing nothing, even though technically this was a good reading. At least it wasn't negative. You can also see the regular CPI also as expected, and again, lower than the previous reading. So that's our good bias over there. And CPI year over year, 4% as opposed to a 4.9. That's good as well. Guys, let's go ahead and just jump straight to the charts. What you can see is, of course, we're still in this wedge formation. And as I keep telling you guys, we're only, we're only like 3% down since we started this formation. Yes, it's a toppy formation. Yes, we've had a massive spike up here, which then had, I believe, a 20% drawdown. Actually, 16% drawdown here. However, we have to remember that this is overall a bullish structure, and so the measured move is approximately to 30,000, assuming that we get on top of this structure. I remind you of this every time, just because in case it happens, you got to be ready for that bullishness. I don't want this type of market psychology to brainwash you into thinking it's only down only. Okay, the perma bears, they're going to try to drive their little brain worms into your head, and honestly, it can just bias your vision. Now, do these patterns tend to have some type of a fake out to the downside before eventually breaking out? Yeah, that happens a lot. What's going on is that usually those bullish patterns are trying to grab some lower liquidity to use as rocket fuel to push up. And that's why we could see something like 24.4. Right, we have kind of this structure over here. We could see like 24,400, 24,500, or we could see this area of 23,000, or maybe even 21,000. All of this is fair game as rocket fuel for the next leg up. And of course, nothing is instantaneous. I know everyone wants instant gratification, but sometimes these patterns can take 3 months to play out. And so there's plenty of time for the bears to be right. There's plenty of time for the bulls to be right. And then, of course, we only find ourselves kind of divided in our debates when there's these setups for liquidity grabs, because we don't really know, are we going to grab this liquidity up here? Are we going to grab this liquidity up here? That's what the whales, set up. That's what the whales set up in motion. And you and me, just Joe Trader, we can't really choose that direction. Okay, it has to be chosen for us by the market makers, by the overall bearishness in the market, by the overall bullishness in the market, and the market forces much larger than ourselves will choose whether we just have a breakout or whether we have a fake out and then a breakout. And so there you have it. But of course, there is plenty of liquidity here to grab should market makers want to just freak everyone out. And should the stock market collapse, which I really doubt because that CPI reading was pretty good, then of course we could explore lower. But just right now, I'm not in that position. I don't have that view. you can go to some perma bear and talk about that. I just don't believe we're in that position right now. Do I think we could explore as low as, a double bottom, or maybe 1800 or 18,000, maybe 20,000? Yeah, yeah, it's possible, but again, it's just not on the table for me right now. Guys, let's jump over to the 1 hour so that I can give you some new setups here. And if we look at the 1 hour, well, I think maybe we should just do a review. Some of you guys liked that, so let's do the last 1 hour setup that we had there. Just let me zoom in on this thing. And you can see that where we were on the chart on the 1 hour here, in the last episode, you can see just how these levels were respected. Generally speaking, we maintained our price action between the bearish and bullish control zones. Okay. And also, we got a lot of movement in between the momentum pool. You see this movement here, you see this movement here, you see this movement here, you see this movement here. Okay, so we had lots of setups between the momentum pool here. And then, being on top of the momentum pool, on top of the volatility pivot, we saw these pushes up. And being below the momentum pool and below the volatility pivot, we saw this push down. So there were also these kind of extended plays to take. Now, those plays don't tell you how far it's going to go. It just says that if you take a chance on these setups, that you are in a higher statistical likelihood setup for your entry. And of course, your entry is going to be on those momentum pool levels. Guys, let's go ahead and just throw on some, boxes just to see what were those plays that we could have taken. I'm going to jump down to the 15-minute just so we can get some detail here. And then I'm going to put the chart on a line chart so that we're not distracted by price action. And what I can show you is that if we just focus on where we started, that's this vertical line over here, and the price action that went through the momentum pool, you can see at the top when we broke down into the momentum pool, that was the trade to take to the bottom of the momentum pool. When we held the bottom of the momentum pool, that was the trade to take to the upside. Okay, and again, like this is the 1 hour chart, so that's pretty much for the 5-minute and 15-minute kind of snipers and all these guys who are just kind of like trying to get a good play on the 5-minute or the 15-minute. And we're on the 15-minute chart right now, but this is the 1 hour setup. And if you had just taken that long at the bottom of the momentum pool, yeah, you could have been stopped out if it continued to go down, but that's why you're going to have a very tight stop loss. And in fact, what happened, it did bounce off the bottom of the momentum pool, and then it continued to go all the way up for 1.3%. So if you were at 100x leverage, then you just got 130% play, right? If you were at 20% leverage, then you just got whatever, almost 30% play. Guys, I can't tell you where exactly it's going to be rejected just from one chart. You have to look at the other charts to know where their limitations are. For example, if I put on the 6 hour, you're going to see that we had a neutral point of control for the 6 hour right there where it hit like right there. Let's see if I put on the daily. Maybe if I put on the 2-day, we can just see, we can go through these different levels, and there might be something there, or there might have been an EMA or something. Anyway, charts reverse themselves. I'm not saying that this thing's just going to continue forever in the upward direction. I'm just saying that you can get a nice play. If you start to see a reversal, then it's up to you to decide when you want to take your profits. Now, I think for leverage traders, like on the 5-minute, and on the 15-minute, They're very, 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 very happy with 1.3%. They're very happy with 1% trades. So this was an excellent setup for you guys, okay? And then what happened? Well, we're above the volatility pivot. We're above the momentum pool. So you're not going to short this, okay, because your bias is actually to the upside as long as you're above the volatility pivot, as long as you're above the momentum pool. So I never recommend anyone to short above those levels, at least when you're looking at a specific chart, okay? And so if you're trading using the 1 hour chart, and it doesn't matter if you're on the 5 and 15 minute, if you're trading using the 1 hour chart, then I just have to tell you that your bias on the 1 hour is to the upside above these key levels, so I'm not going to advise you to short there. But what happens when you get back into the momentum pool is you lose your hold momentum. So if you lose your hold momentum, you can take that trade to the downside. Now here we don't see this, this kind of line graph like showing it going down. But I put the candles back on. Oops, that's Hake and Ashy candles. Put the candles back on. You can see that we did get a wick there. Okay, so this flash wick came all the way down. You can see we turned around down here. As soon as we entered the momentum pool, you could have taken that trade to the downside. And in fact, it extended further than what I marked here. So it actually came all the way down here. And then what's going to happen as soon as you bounce back up and you get above that volatility pivot or above the bottom of the kind of momentum pool here, then you can take the long. And also this long extended higher also than what I marked out. So you can see the long went all the way up here, but you could take your profit at the top of the pool, or you could take your profit, wherever it ends up going. But that's up to your risk management. Now, what happened? It didn't like continue to go like this spike over here. But I'm not going to tell you to short when you're above the pool and above the volatility pivot. So, but what's going to happen when you re-enter the pool? Then I can say, aha, that's your shorting cue, and then look what you got. Okay, because you took that shorting cue, you got a 1.3% move to the downside. So now, guys, okay, on 100x leverage, you made 130% up. You made 130% down. Okay, so there was two 130% plays off of this, again, and you could be using 20x leverage, and you could be taking your profit early, and so it could have been just 20%, 20%, okay, but you got two 20% plays if you're doing 20x, okay, and if you're being really conservative at like 5x leverage, then maybe you got 5% twice. Okay, it's not my fault this chart isn't like really spiking to heaven or dumping to hell. Okay, that's just low volatility in the market. When we're in higher volatility conditions, this could be a 3% play. It could be a, whatever, okay? But as it happens, the chart only gave us 1.3%. So that's what we have to play with. Now, what happens, we're here below the volatility pivot, below the momentum pool, and we ended up just starting to claw back. So, you're going to take your profit at some point. That's, again, up to you. We didn't reach the bearish control zone, so that should have been like a front runnable kind of indication that this thing wasn't going to continue bearish. We put in a little bit of a higher low right here, and so you could have thought, like we're going to continue to pump, and so we did continue to pump. What happened is we got rejected at the volatility pivot, we got rejected at the momentum pool, and being underneath the momentum pool, underneath the volatility pivot, that was your cue to short again, just to take a chance. Okay, just to take a chance. You have your stop loss really tight, but you take a chance. And then you got that, what was it, like a 1%, almost, 0.7% drop to the downside. Again, this is for leverage, guys, because we're on the 1 hour, but you can do the same thing on the weekly charts. You can do the same thing on the daily charts, and you're getting much bigger percentages over a longer period of time. On a daily basis, I can't report that stuff. Okay, I can only report these shorter time frames on a daily basis for learning purposes. And then what happened here? You ended up maxing out. You got above the Bollinger Bands. That's a big cue with this higher low right here compared to here that you're potentially entering an uptrend again. And so you could have taken a trade off of the Bollinger Bands if you were using a Bollinger Band strategy, but because we're using the pivot and the pool strategy here, then you're probably going to wait until you're above the pivot, and then you're going to take this play right here. Now, that one ended up being cut short by the top of the pool, and you ended up taking the short on that one. And here we are again underneath the at the bottom of the volatility pivot. Now you could take, you would just want to watch this, and you could take a chance if it gets like a back above the pool here. You could take it to the upside, or if it gets below the volatility pivot, you could take it to the downside, right? So below the pivot, above the bottom of the pool here, above this add lose momentum level, you could take it to the upside. So that's what I'm looking at. Now, I was trying to make a new format where I extend the pool to the volatility pivot just to make it more simple to monitor. But I think I am going to just restrain the pool to the two green lines, just because according to this chart, it is more accurate. And so that is going to give you the more accurate play here. So I think I'm not going to change my method. I think I did get it right in my first construction of it, and I did try to simplify it for you guys, but no, there are two working parts that we need to pay attention to: the pool, the pivot, and then, to be honest, we also have to pay attention to volatility because we're very low volatility right now. It means there's not that much movement. But guys, there's a beauty in having low volatility, because when the expansion moment comes, you are going to get sent. You are going to get absolutely gigasent, okay, depending on which side of the pool and the pivot you're on. And so that's why you want to be taking these chances, because when the volatility expands, you want to ride that wave. So getting in when there's low volatility is your best strategy. You don't want to get in when it's high volatility, because that just suggests that volatility is going to contract from there. If volatility is contracting, you're just going to chop sideways. It's not going to do anything for you. Okay, so this was just learning. This was the previous chart, guys. And in fact, I should just do this learning moment previous chart, just as a warning there. And let's see, where did that get put? Is that this one? Yep. Let me just put this into this learning file. And then I think every few episodes, maybe I'll do one of these learning sessions just so that you can understand what's going on. Now, again, guys, below the volatility pivot, I'm only going to short. Above the volatility pivot, I'm only going to long, unless there's only one exception, unless we're in the momentum pool. In the momentum pool, I'm going to take the cross trades just because I know from experience that, the way that the RSI works is that we just kind of bounce around these levels a couple times when we get stuck in the pool. It just so happens that the bots and the algorithms, they like to play around with these two levels. And so inside of the pool, like, there's a reason I carve it out, guys, okay? Like, inside this pool, it's just a pretty high reliability trade to take from one side to the other. And, again, like, you can see what happened. You got in it, you went to the other side, right? You got to the other side, failed to get accepted, you went back to the other side. Like, it's just such a reliable trade. And so, being more than a 50% chance of working out, that means that I have to be able to endorse that. And so, again, above the pivot, I only take longs. Below the pivot, I only take shorts. The only exception is within the momentum pool, in which case we can take cross trades, and you just take a chance, guys. It doesn't guarantee you a win, but it's a very, very high probability trade, these type of setups. Okay, I hope this makes sense, guys. We absolutely killed it. The Alpha Fam is absolutely killing it, guys, as long as you pay attention to these rules. Now, why do I have the Bollinger Band midline on there? It's because it just gives you extra confluence, guys, right? Look at this. Above the Bollinger Band's midline, right? This kind of like green, kind of wavy line that goes through the chart. Above it, you're really in that bull trend. It just gives you extra confidence to take that move. Below it, look, you can just have extra confidence to take that short, okay? You're just traveling along it, okay, it's pointed down, you can take that short. Above it, yeah, extra confidence to take this long, and you could have also longed off the Bollinger Band here. It's just that's not part of my strategy. I'm not going to take it just from one data point. I need a couple different data points just for confluence. Okay, that's what I'm doing. It does work now. And look at this, guys. Look at this, right? What did I say? Underneath the volatility pivot, you're going to have a high reliability shorting setup. And we're seeing the candle live. Look at this. Look at this drop, and I guarantee you it's going to get some reaction at my neutral point of control there. You see that little bounce it's having? Look at that, to the penny accuracy, guys. And again, this isn't even today's setup. This is all the way back here. Okay, these lines were made all the way back here. And look at that setup. If you were kind of sniping a trade on the 5, let's go to the 5 minute. Let's see what the 5 minute looked like. Look at that. Look at that beautiful trade on the 5 minute. If you were sniping a trade on the 5 minute, wouldn't you have wanted to enter on my volatility pivot line here? And look at that reaction. Boom, guys. Boom. Absolutely. This was the trade. Okay. You could have 100x to that leverage, right? As long as you're controlling your risk. And if you're a newbie, please don't use more than 3 to 5x leverage. Look, we're losing the neutral point of control. Bulls tried to defend it, but we're seeing live what can happen when you pay attention to these key levels, guys. Okay? I hope this makes sense for you. Even though this pattern still, as I told you guys, like these key levels that I give you, they're good for multiple days. Okay, it's not like they just suddenly disappear. The only thing is I can give you some new levels which will be valid for longer in the future as long as we hold the same level, because we've put in new price action, and so there's new calculations. And so let's go ahead and just update our key levels, and you can see what's happening here. Okay, it gives you a much better picture of what's going on with this new price action. So here's the new chart. And what you can see is, and I wish I had shown you this a little bit earlier, because this would also have given you the shorting setup right here. Look what happened. I didn't just type this out, right? So this must have been before I started recording the video. I had this momentum pool right here. We were on top of it, in fact, when I made it, but we came in, and then what did I tell you? With a high probability, we entered the pool and we went to the other side, and then having lost the momentum pool, what happened? It's a likely trade to the downside. Now, we're still above the volatility pivot. However, I told you we take that short inside of the pool, okay? Because that's just like the special case. And so we would have taken that short here, and then we'd still be in that trade to the downside here. Okay, we'd still be in that trade to the downside. And the thing is that you can take your profit at any time. Why? Because we're still above the volatility pivot. And as long as we're above the volatility pivot, there's just a good chance that we can recover this. Okay, and so what the 1 hour is telling me is that this could be just a fake out. It could be just a liquidity grab. And so if we did see a price action come all the way down to the volatility pivot, there's just a higher likelihood that any random volatility could spike us back up to the pool, and we could just try again, guys. Okay, try again. Let's go ahead and just jump to the 1 hour, because we were on the 5 minute and the 15-minute chart there. I just want to make sure that we have some clear understanding. And so here you see it dumping from the pool. And our volatility pivot is at 25,864. This is the 1 hour, so that's going to have a high fluctuation, over the course of the day. But, if you watch this video pretty soon after released, then it should be in that neighborhood. What's going to be more reliable is, again, the pool. which is currently bound by 25,978, and let's say 25,961. So a pretty tight pool there. But you can understand that if you get on top of it, that's a good long. If you're embedded below it, then that's a good short. When you get underneath the volatility pivot, that's a high reliability one. And again, personally, I don't long if I'm below the pivot. I don't long if I'm above the pivot. Just inside of the pool is the only place that I do that. Just my own strategy. But if you want, you can long and short off of these levels to your heart's content. Okay, because these levels tend to hold up. It's just I employ some rules there, and I'm trying to develop these rules. If you figure out one that's better than what I got, then you can let me know. But that's what I got so far, and I've been working on it for a year for this particular strategy. Let's see, which by the way, this strategy called the bottom of the market. So yeah, take it what you will. We were there at like 15,500. We were there at 16,000 using this strategy, where other guys were like, we're going to fall to hell. And I was saying, nope, time to long. All right, guys, so that was the new 1 hour. Let's go ahead and jump over to the old 6 hour there. And this is going to be just kind of the review of the old 6 hour, but I'm not going to do it in as much detail. And you can see from yesterday, we were here above. Look, we got right above the momentum pool. We were above the volatility pivot. And look, we just took that trade right to the neutral point of control. We did exceed it, but it was just on a wick basis. We came back under the neutral point of control. And look what happened. We just came back down to the momentum pool. We got to the bottom of the pool. We were above the volatility pivot, and look, we got a nice long off of that one. Now we're breaking down to the pool. Could we continue to sink back into it? Sure. Again, like these levels will continue to be valid, for until it starts slowly disintegrating, right, or gets left behind should price action move out of this area. But I can just give you some fresh levels, okay? So here are the fresh levels for the 6 hour that includes the new price action. And so what we're looking at here is a volatility pivot at 25,861, and then the pool being defined by 25,930 and 25,847, and we're just right at the pool. More bullish is going to be above the neutral point of control at 26,133. That's going to be a little bit more exciting. And then underneath 25,835, I'm going to get worried that we're just pointed in the bearish direction there. Okay. Let's go ahead and jump over to the previous daily levels. And the previous daily levels, same thing here. Just look at all these wicks. Okay, this is extremely low volatility. But imagine we're catching these plays, right? Nice, right? Now we're catching plays, and they're just tiny ones. Imagine when we're catching the big ones, guys. Okay, when volatility returns to the market. That's why you want to know how to use this strategy. Guys, what happened here? Okay, well, we can see that we were right here at the bottom of the pool. And what I say, it's a high reliability trade. We're going to go to the other side. What did we do? Look at this wick, okay? Like we had a high reliability trade. That was just a wick. We came back into the pool, and what happened? We dropped down to the bottom again. We tried to get back up today, and we only got to the general continuation line. But that was pretty reliable. Up, down, up, and basically hitting the key levels, okay? Yeah, did we wick, beyond or below? Yeah, but that's not the key point. The key point is that we had the reliability inside of this zone. And even this general continuation, which I never talk about because it's not a highly accurate level. I just include it because it represents the MACD, and the MACD is just notoriously, just it's a little bit more ambiguous. Okay, let's just put it that way. And you can see that it almost got it. It almost got it, but MACD traders kind of pushed it to that level, and now we came back down. They just weren't able to do it. So we're at the bottom of the pool. What does that suggest? That, should we lose that area, we could try for another wick, to this bearish control zone. You can see that we've been trying it, right? We could try it again because we had a couple rejections, and actually we're seeing it right now, right? We're seeing this push to the downside right now. But it's time to update you. So let's get some new levels, because again, remember, this was the old one. And if we get some new levels here, let's see here. You know what? I think I'm going to skip this one because I'm not. I think I did it, but why isn't this aligning? That's very suspicious. No, this should be accurate. Yeah, we're underneath the volatility pivot. We're underneath the momentum pool, and this is the bottom of the pool, 25,930. You can see us pushing down off of it already. Yeah, so why not take a chance at the bottom of that volatility, pardon me, at the bottom of that momentum pool, whenever you see that level, why not just take a chance, okay, to short, as long as we're underneath the volatility pivot. Now, were we to get up here, I wouldn't be shorting. I would be longing because the top of the pool, there's the one, it's hiding underneath that one. Okay, they're basically at the same line here. And so above 26, 126, that's where I would be taking longs. Of course, we can do the cross trades inside of the pool, but really I only want to be shorting down here. I only want to be longing up here, and then we can take cross trades. Even we can use that general continuation line if you just want to take a little conservative play. But let's see, there we go. Sorry guys, sometimes TradingView moves the boxes and stuff. I don't know why. Let's go ahead and take a look at our old 3-day. And yeah, so whenever TradingView moves like my lines, I just always get skeptical. So just take that daily one with a grain of salt. I may have to double check it after recording. But the 3-day is also going to be closing tomorrow. And the good news is on the daily, it kept the proportions. So it should be right. Just TradingView is a little bit buggy sometimes, but it's still the best software. I still love it. You guys got to get TradingView because these are the tools of your craft, guys. Like, you know, if you're in construction, you got to own your tools, right? You don't want to be borrowing other people's tools. You got to own your tools. You're in trading, so you got to own this tool, which is TradingView, and it's just gonna make your life a lot easier. Guys, yeah, so here's the old 3-day setup, and you can see what happened here. Bottom of the pool, went to the top of the pool. Top of the pool, went to the bottom of the pool. Now we're at the bottom of the pool. We're trying to hang on to this pivot here, right? This volatility pivot. And, should we get it, then maybe we push back up. Should we lose it, maybe we end up pushing down. But again, like, beautiful strategy. What was the percentage that we got off of this one? Oh, look at that. 7%, guys. 7% up and 6.25% down, okay? So now imagine that on leverage. Okay, so that's what I'm telling you. You can do these on the higher time frames, and while I'm marking it out, it may not be believable because you're only seeing this candle right here, but the proof is in the pudding. Okay, and then just imagine, like, if you had taken that risk at the bottom of the pool when it was pushing up, and imagine if it had flipped it and kept going. Okay, you would have had the perfect entry. The perfect entry here, and we would have already been pushing up. And look, it never came back down to stop you out. It would have just would have kept going. Okay, so just beautiful. You could have a tight stop loss. Just a beautiful entry there, guys. Now, as it happened, it got rejected at the top of the pool. Just wasn't decisive. It came back down again. We breached the bottom of the pool, but in pushing back up, now you could take a chance if you wanted to, but because we're at the bottom of the pool. You could take a chance, and you could put a tight stop loss. But of course, multiple candles have gone by there. So let's go ahead and jump over to the actual 3-day chart here. I was on the 1 day so that you can see detail. And what you can see, and guys, keep in mind, like if you're using my 3-day chart, you can trade it on the daily. You can trade it on the 6-hour. If you're using my 6-hour chart, you can trade it on the 1 hour, right? If you're using my 1-hour chart, you can trade it on the 15-minute, on the 5-minute. The lower time frame is just going to give you better detail, okay, when you're trading these higher time frame charts. So here's the new 3-day chart analysis. You're going to see that, right, there we are. You're going to see that our volatility pivot is now at 26,750. Essentially, you're going to see that the top of the pool is 27,065. The bottom of the pool is 25,937. Currently, we're toying around with the bottom of the pool, and we're underneath the volatility pivot. So this is why the updates are good, right? Because it's now showing you that, yeah, okay, the previous pool expired. We're now in this lower area. Yeah, we could keep pushing up, but as long as we're underneath here, probably we're only going to be wanting to short as long as we're underneath that volatility pivot. And we probably don't want to long unless we really, get up here above that Bollinger Band's midline up there. Now, could we flip in here and just cross this one? Yeah, we could. We could take a chance along the pool. That's what I was saying. You could take a chance, but currently we're just sitting on the hold momentum level. We haven't lost it. I just want to clarify, we haven't lost it. Okay, the previous setup is still valid. It's just we're just kind of undulating around it. That's all. Okay, so we could have little wicks up, little wicks down. And it's up to you if you want to take the chance or not. I'm not seeing anything particularly stellar going on here. So it looks like almost no change in the 3-day chart. But yeah, these are your new key levels. Just pay attention. Do we start losing this wick low here at 25.6? Then maybe that's going to be a bigger drop, especially if we lose 25.358, then that's probably going to continue to the downside. And then there's the bearish control zone at 23.930. We flip up here, and then the bullish control zone is at that 30,000. Why are we on watch for that? Again, because of our wedge, and you can see how this kind of aligns with getting on top of the wedge, and then that play, hey, what do you know, to 30,000, which is the measured move of the wedge. This could very well happen, okay? But also we could just do like a little fake out thing and then go as well. And then there's other time frames which suggest other levels down there. So again, unless we get down there and measure it on that day, then we really don't know what's going on. We can just hypothesize the future, right? But this is what we're looking at right now. And currently, the 3-day still has a bias to the downside. It is going to be closing tomorrow, so we can't say anything definitive right now. You want to take your trade off of the close. You don't want to take your trade right before it closes. Okay, so if we close under here, that's the short signal. If we close above here, then that's the potential long to this diagonal, which would be somewhere between 26.5 and 26.3. Maybe this wick over here, 26.4, right? And should we flip that? It's going to be a little bit interesting. Things are getting a little bit spicy the more this wedge starts to reach its apex. Okay, because things are ending. And tomorrow, guys, we actually have the Federal Reserve. They are going to do the Fed decision, okay? So tomorrow we're actually going to have the PPI data, and then immediately at 2 p.m. Eastern Standard Time, the Fed is going to make its decision on rate hikes. And I think we're pretty much done with this wedge almost. And so that's probably going to be the catalyst over the next few days that ends up either taking us up or taking us down. And, just my bias on these type of wedges is that usually they have a fake out down and then they get back up. Is that what's going to happen? I don't know. Okay, nobody's a fortune teller. We don't know what's going to happen to the stock market, but just watch out. High volatility week. Guys, that's your alpha for the day. Stay safe and happy trading.